Company being analyzed today is Emmvee Photovoltaic Limited. This is a company which manufactures solar panels. So today we're going to analyze the company's financials, what it actually does, and its future growth plans. So let us start. First, we have a market cap of 12,738 crores. So it's not a small company by any measure. Then current price of one share is 184 rupees. The price to earnings ratio is 22.3. ROCE and return on equity both are very important metrics, not always accurate by Skinner.com when comparing it to the company's own reports. But return capital employed of 28% and return equity of 105% are pretty good numbers. Let us go to the profit and loss of the company from 2021 all the way to 2025. Here we have sales in CR, then operating profit, very important, then operating profit margin, then profit before tax, and finally profit after tax or net profit. So in 2021, the company reported sales of 426 CR. Okay. Then in 2023, the company reported sales of 616 CR. Okay. And finally, in 2025, fiscal year 2025, the company reported sales of 2,336 crores, 722 crores of operating profit, 31% operating profit margin. You can see the sharp jump from 13% last fiscal year to 31% fiscal year 2025. And as we go down, we see 369 crores of profit after tax. Previous year was 29 CR. Fiscal year 2024 was 29 CR. And compounded sales growth over the last 3 years has been 61%. TTM, which means trailing 12 months. We are currently in December 2025, so December 2024. From then, trailing 12 months will start. 145% growth in profits. Sales. Compounded profit growth over the last 3 years has been a resounding 234% CAGR. And finally, let us go to the cash flows. We will pay attention to cash from operating activity. In 2021, fiscal year 2021, the company generated 97 CR cash from operating activity, 129 next, dipped to 59 2023, and 614 crores of operating cash flow for fiscal year 2025. So in cash flow terms, the company is positive. Let us analyze the company's what it actually does and future plans. Now this is not very clear. That is why I'm going to constantly zoom in. So these are the latest financial numbers. Okay, the very latest financial numbers. Okay, so revenue from operations, you can see the quarterly numbers, you can see all of that. Pay attention to this, the EBITDA margin. In H1, which means the quarter one and quarter two of fiscal year 2026, the company reported EBITDA margins of 34, 35%. So these are newly made, very high EBITDA margins. And the company in the con call said it's looking to maintain these margins. So that's what I wanted to show. Then profit after tax, you can take a look. And below, you can see 115% return equity annualizes annual. Return capital employed 32.8% according to the company. And in quarter two fiscal year 26, 21% profit after tax margins. So that is what I wanted to actually show. Then we move down here. Okay. So installed capacity of solar modules and installed capacity of solar cells in megawatts. Okay. 7,803 megawatts or 7.8 gigawatts of total solar modules. Modules are like, consider them panels. Okay. So solar modules, this much capacity they actually have. Solar cells, which are a component of panels, 2.9 gigawatts or 2,943 megawatts. This is the total installed capacity. Then they currently have an order book, that is orders from customers of around 5 gigawatts. And you can see who have they gotten these orders from. We got CNI means I believe customers and industrial. So yeah. Now effective capacity utilization, these are the how much of capacity is actually getting utilized. So for quarter two, only 43% of the capacity, solar module capacity was utilized, while 59% of solar cell capacity was utilized. And in the latest On call, management said, I believe, that the solar cell capacity utilization can maybe reach up to 80-85% by end of year. And this was how much it was actually produced. So in quarter two fiscal year 2026, 682 megawatts of solar modules were made and 319 megawatts of solar cells were made. Okay, so you got order book. You were able to learn about the total installed capacity, which is of course very important. And now future growth vectors. Future growth vectors. This is their expansion plan. So we are currently in December 2025. This was released, I think, around September 2025. So around September 2025, it's written June, but June, September, capacity is this much. We saw that. By the H1 of fiscal year 2028, which I believe is around September 2027. September 2027, they want to increase the total module capacity to 16.3 gigawatts. So next 24 months ish time frame, I believe so 24 months ish time frame, they want to increase it to 16.3 gigawatts modules and want to increase cell from 2.9 gigawatts to 8.9 gigawatts. That is a massive increase. And they're currently in the progress of adding a 2.5 gigawatt module manufacturing line, which is expected to be operational in fiscal year 26. We are currently in fiscal year 26. So you can see they're actually adding a lot. Then we move on to this page. Okay, order book has increased a lot. We already saw this order book. Then the average order size among the top 10 customers. Okay, repeat customer rate 32%, 31%, 32%. So around 31% of the already customers they have, they're getting orders from. So repeat customer rate is there. There's some amount of repeat customer rate, and some of the key customers are like KPI Green Energy, we got Hero Rooftop, Aditya Birla, and others. So it's a B2B, of course, majorly B2B company. Then this. We got some more financials. We already saw revenue, we saw EBITDA, we saw PAT. Okay, let's take a look at ROCE, return on capital employed. This has seen a sharp increase. So it's 23%. Before that was 5% in fiscal year 24. So capacity must not have been getting utilized a lot. They must not have been making a lot of money in that time. And now profits soared. So this also soared. And return on equity, you can see 16% in fiscal year 24. Then, of course, the massive ramp up in capacity, and of course, production came, money came. So, more than 100% return on equity. That's really good. That's really good. Mostly. Then, debt to equity. Lower this metric, the better. So, debt to equity is the blue one, while this white one is net debt to equity. Net debt is total debt minus cash and cash equivalents. Okay. So debt to equity reached 8.5 times in fiscal 24, then has reached down all the way to 0.8 times as of latest, which is good. Lower this the better. And net debt to equity went from a high of 5.4 times to around 0.38 times, which is also really good. And current ratio, which is current assets divided by current liabilities, is this better or worse if it's more or less than one? It depends. Honestly, depends. Now we looked at the capacity, how much they're planning to expand. Let us look at the future opportunity as an industry wise future opportunity. So, okay, let us, I think, zoom out a bit. So, positive macro and sector fundamentals. Positive macro and sector fundamentals. So, first, India has one of the lowest per capita electricity consumption in terms of kilowatt hours. That is the measurement method. So, India is around 1,159 electricity consumption per capita. Brazil's is more than double. Look at UK's, look at US's. Jesus, US's? So, still a lot of room to grow. Power demand is expected to grow. The total power demand is expected to grow around 5 to 7% CAGR till 2030. It's expected to grow that much. Then, renewable energy capacity is expected to grow by twice X, meaning expected to double by 2030, fiscal year 2030. So current renewable energy capacity as of fiscal year 2025's end was 173 gigawatts. And totally, it's expected to reach, I believe, 360 to 380 gigawatts. All right, will lead. Okay, solar is expected to form 34% of the total installed capacity by 2030. Is this like total installed of what? Renewable or total? It says total installed capacity. Wow. And as a percentage of total installed capacity, all fuels in India by 2030, solar is expected to reach 34%. Right now, it's already formed 21%. That's really impressive. And 140 to 160 gigawatts of solar capacity additions over fiscal year 2026 to 2030. The next four fiscal years, 26, 27, 28, 29, 30. Okay, that's five fiscal years. A total of 140 to 160 gigawatts are to be installed, out of which grounded and mounted. So grounded, like literally on the ground, is 100 to 105. Rooftops are 30 to 35. So as I said, rooftops. Some more new sectors to actually drive this power demand for like solar and renewables will be, first of all, of course, data centers, then electric vehicles penetration, and green hydrogen production. This is new. Green hydrogen is a type of fuel, and it's green. So yeah, it's green. Then this is pretty important. These are some policies, okay, initiatives of the government. So first is this. India is putting tariffs on imports of like solar modules and all of that. Then USA is putting tariffs on China imports. And USA is also putting tariffs on Southeast Asia imports of like solar cells and I think solar modules. So India is well positioned to capture, first of all, the US market, to do better in the US market, and of course, protect its own domestic market. That is what this is saying. Of course, we have stuff like, first of all, approved list of modules and manufacturers. This is literally a list which will tell the requirement that manufacturers must have in terms of quality, in terms of capacity, if they want to actually produce solar modules or solar panels. So, this approved list will kind of lower the competition or make it narrower, more defined, who is actually able to produce what. And of course, PM Kusum schemes, these are all government schemes. Like PM Kusum is, I think, promoting solar pumps, installation of solar pumps, and they need solar modules for solar pumps. Then production linked incentive in India, this scheme which promotes manufacturing in India. So more manufacturing to come in India. Then domestic content requirement, meaning the modules must have domestic components. Like solar cell is a component of solar modules. Ingots and wafers. Ingot wafers are a component of solar modules. So they must be produced in India. So these are some kind of what you say government schemes and policies in order to promote manufacturing in India. And of course, tariffs. USA is a massive market. And for example, companies like Wadi Energies, they have a lot of orders coming from US. They export a lot to US. So that's a good thing if India does not get like tariffs, not as to an extent of like how China got. So yeah. And of course, evolving landscape. Now, this is pretty interesting. So there are different types of, you can say, solar modules. For example, monoPERC and the recent upcoming TopCon. And you can see there has been a shift. So earlier, there used to be a certain kind of, let's say, module which used to be produced. I can't find the exact one. I think it's monoPERC. I can't actually find it. Multi-CS. Okay, basically, there was a kind of module which was produced before, this 73%, and now it has gotten shifted to almost zero. So this evolving technology, different types, more efficient kind of tech is coming up. So of course they will need to adapt. I think finally it's this industry long-term supply demand scenario. MV integrated manufacturing capacity positions it well for long-term sustainability. Okay. So, what is this? What is this data? So, modules and cells. So, fiscal year 2026, we are currently in fiscal year 2026. 110 to 120 gigawatts of module capacity is there, expected to reach 175 to 185. Cells is 40 to 50 gigawatts, expected to reach 85 to 95 gigawatts. This is the supply demand scenario. So this is the consumption, right? And these are projections. The P means projections. So consumption, these are the exports, these are imports, and these are production. So currently on a yearly basis, 34 gigawatts were produced in fiscal year 25, expected to reach 40 to 50 gigawatts by fiscal year 26. Then approved list of module manufacturers. The second list is expect these norms are expected to come, government norms, and that's hoping to push. First of all, consumption will be reaching this. Imports, they want to squeeze imports from 5 to 15, from 12 gigawatts all the way to like 2 gigawatts. They want to squeeze imports. You can see it's going from 12, this import color, going from this to this. And they want to increase like production from 34 all the way to 65, 75, like per year annually. And increasing exports from 7 gigawatts to around 15 to 25 gigawatts by 2050. That's a wide range. Share of exports in production is expected to be 25-32%. And the biggest market is, of course, the US market, for like India especially. So I think that was it. Yeah, what can we say? So demand is said to be there. Export demand is said to be there. There's a certain number of policies which have come up, both external policies, other countries, and internal policies of India, which are there to promote, we can say, solar industry. And yeah, they have a big order book, 5 gigawatts. And one last thing, if I remember it correctly, this 5 gigawatts of module capacity, 4.9 gigawatts of order book that they currently have, it will take around 12 to 18 months to deliver for the company. And their thing is that they want to keep their order book on such a size that it will take around 12 to 18 months to actually deliver it. So they want to receive that amount of orders, which will keep them busy for around 12 to 18 months and all of that. So that is it. MV Photovoltaic Limited. The management hopes they can maintain around 35, 34% EBITDA margin. That is it. Bye.